All right. What is up, everyone? Beautiful day. Hope you're enjoying your weekend. Just got done cutting the grass. Okay. Still like to, go out there, cut my own grass, rather than pay someone, connect with that physical labor, connect with the earth. And I've got some great videos I'm going to be dropping for you. Okay. The S&P 500 finally snapped its longest streak without a 2% drop. Okay. This is something that everyone basically has been panicking over, all right, and saying it's going to happen, it's going to happen, it's going to happen. It finally happened. Okay, we got that out of our way. But when you zoom out, right, you look at the monthly time frame for the SPY, we're in a very strong uptrend still. Okay, the weekly chart, we broke this down in the Discord for all the Discord members. Every time we've gotten a bearish engulfing candlestick since 2022, it has led to further downside, right? And we went over that, about 2 weeks ago, whenever we got that bearish engulfing candlestick. Okay. And we'll take a look at the daily chart for the SPY as well. But a lot of this is playing out very, very well with seasonality. So we're going to go over election year seasonality particularly. Then we'll even take a look at the VIX seasonality. Okay. Again, all of this is lining up very well. Things are moving very seasonally. And, they are laying out a good roadmap. Okay. It's not going to work out perfectly. It's not something to go all in on, but it is a very good roadmap and has been very effective. So we'll take a look at the VIX and its seasonality. More importantly to me, I paid a lot of attention to the VVIX, which is the volatility of the volatility index. That gives you a little bit more clues, in my opinion, than sometimes just the VIX. We'll break down why. And then we're going to take a look at the dollar as well, how the dollar is seasonally strong in this period heading into mid-September. We'll break down the technicals of the dollar, what it is that I'm paying attention to. And of course, we got to talk about treasury yields and TLT. So to do so, we're going to look at the TNX. All right. To me, looks like we're getting a large topping pattern here. Okay. And when you look at TLT on multiple time frames, right, with a weekly chart right here, it looks like we're getting close to a breakout. We'll go over the very important anchored VWAPs. All right. And it also seems like we've got a bear cycle completion here as well, right? We had 5 waves to the downside, and after a 5-wave move, you are looking for a 3-wave counter. So I'm going to explain all of these things in detail in today's video, just giving you guys a little preview. We've got another wedge here on the daily chart for TLT, and then this is my Elliott wave count, kind of just, feeding off of this bear cycle completion that we've ran into. And we'll talk about some other really interesting data. We've got some stuff from Bespoke here. We've got some stuff from Ian McMillan. We'll talk about the diversification via stocks and stocks, not stocks and bonds. This is actually really interesting to me. And then we'll talk about the II bull bear spread, what signal that is giving us currently at the moment. And then we've seen massive client outflows. This is from Bank of America. We'll break that down a little bit more in detail. It's going to be a great video. Be sure to smash the like button, subscribe to the channel. Okay, don't forget to share the videos. Help me get to 10K. Okay, I'm not that far. Help me get to 10K subscribers. But as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys. I've been giving out really good trade ideas. I try to give out really good, valuable finance and trading related content. Okay. And you can get all of those sent directly to your inbox. Now, if you don't want to sign up, all right, you're not going to hurt my feelings. You can just go to the website. Okay. There's a website with it. Remember, it's completely free. So you can read through some of the previous articles, some of the previous trade ideas, and just see and decide for yourself if it's something that you want to hold on to, or maybe something that you want to get sent directly to your email inbox. Then you can go ahead and subscribe. Now, if you want access to everything and all my analysis, right, use promo code SUMMER. Right, I'm doing a promo code for summer that'll get you guys in the Discord, in the investment intelligence private trading group for just $1. Okay, so for $1 for your first month, you can test it out, and then after that, you can decide to leave or stay if you want. All right. Now inside of there, you get 20 plus swing trade ideas every week. Right, a lot of the charts that we're going to be going over are charts that I've been posting inside of the Discord for members. There's custom scripts and indicators, exclusive intel, as well as exclusive chart layout. So it's going to be a really good one. Let's go ahead and get into it. Now, as I mentioned, we snapped our longest streak without a 2% drop since 2007. Now, everyone's going to tell you, well, what happened after 2007? The great financial crisis, okay? Right now, we do have a little bit of worries of a recession. But over the next 6 months, it does not appear like a recession is about to happen right now. Okay. So when you're investing, right, and when you're looking to make trades, remember the stock market's forward looking. So, you know, it's possible that we could go into a mega crash, right? That's always going to be a possibility. But you also want to keep in mind that we're still in a very healthy bull market, okay? And when we take a look at some of these charts, right, a monthly time frame, right? We had the cup and handle breakout, massive move. We hit a minor target of 565. If we were to pull back to 520, is that the end of the world, right? I mean, to some people, it may seem like it, right? But if we were to just simply come back down to 520, is that the end of the world? No, it's not, right? That's just simply going to be, a low, a higher low, a higher low, and then yet again, another higher low. So we do have a reversal candlestick forming here on the monthly time frame. Oftentimes these can lead to, moves lower, but we'll see, right? We'll see. We can't really predict things. We can just do our best to analyze them. But the weekly bearish engulfing candlestick pattern also followed by a bearish MACD crossover, has led to significant downtrends. Okay, specifically, it kicked off the bear market in 2022. All right. And you see we got a bearish engulfing along with a MACD crossover. We had a MACD crossover here that led to a little bit more of some downside. We had a bearish engulfing candlestick here. Now, if you exclude the bear market, okay, and we just take a look at what's happened to all of the bearish engulfing candlesticks since the bear market ended, well, it has led from anywhere from a 2.5% drop to roughly a 6% drop. So I went over with Discord members back when we had this candlestick saying, hey, it's very possible that we come back down and retest a former price target of 516, 515, right? Right in there in that area. Halfway between that is the top of our demand zone, right there, which is going to be just above 520. So let's call it 515 to 520 is a reasonable target. Remember, we've dropped anywhere from 2 to about 6%. That's 4.4% lower. So right kind of in the half of that 2.5 to 6% drop, we have a large demand zone there, right? And so this is an area where buyers could be present. One of the signals that we're going to be looking for to see if we could potentially drop down to that zone is going to be this weekly MACD right here, okay? We see that it is curling down. It's on the verge of crossing over. The last time the RSI was this overbought and we got a MACD crossover, again, we had that drop right here, that May drop, that early, March, April, May pullback that we had in the stock market. And a lot of people were panicking during that time, but if you notice, that was a really great buying opportunity. Now, when you analyze things even further and you go to a daily time frame, to me, it makes sense if we were to get some type of correction. Okay. Now, a correction, as I mentioned before about TLT, it often comes in a three-wave pattern known as an ABC, right? And that's not the only scenario, but it is one of the common ones. And I was mentioning that, hey, we do have this little demand zone here. But we could drop down, this wave C targets, right, for A, B, C down. We're going to be anywhere from around 540 roughly to about 528. Okay. So, those are some places where I'm looking for and expecting a correction. And I went over how, we could bounce off of the 50-day SMA, and you see we kind of dipped through it and then we opened right back at it. And now we're closing above. But the last time that SPY was trading below its 50-day SMA was a great buying opportunity. Okay, so there's two ways you can go about this, right? You can be a risk on, super risky, right? When I say super, it's not necessarily super risky, but you can be aggressive, right? Aggressive with your risk profile and attempt to buy the dip below the 50-day moving average, right? And that would put us, if you look, I just duplicated the same exact circle and put it right under the 50-day moving average. And that puts us right in between our targets here of 540 to about 528. If you want to be an aggressive dip buyer, you can look to do that, okay? But you need to have patience, right? Or what you can do is you can look to see if we drop back down. You want to see if we reclaim it, right? If we can reclaim the 50 SMA right here. Because if you look, we came down, right? We chopped around a little bit, and then we gapped up above the 50 SMA, and we didn't look back, right? We just continued going higher from 515 all the way up here to 565, right? So that's two ways of an idea to play the SPY, right? You can be overly aggressive, try to buy the dip below the 50 SMA, knowing that it could potentially keep going lower and keep going lower, or you can wait for it to reclaim the 50 SMA. Technically, we've already reclaimed the SMA, but I do think, even if you want to use that as a trailing stop loss where we're at right now, it's not a bad idea, okay? And it'll keep your risk relatively low. Now, let's move on to some other charts here, okay? We talked about the SPY. Let's go ahead and get into the S&P 500 election year seasonality. And the important thing, everyone, that we're looking at is we're looking at trend. So the red year is going to be all election years. What is the trend here, right? It's an overall bullish trend that starts the year at one point and ends the year higher at another point, okay? We're on that trajectory right now, okay? Now, the performance of this year has been much larger than the average of all election years ever, okay? But if we look at the period that we're heading into right now, okay, we typically peak in this time period where we're at. In the beginning of August, we do see that normally we have a little bit more of upside and we potentially even top out here in September. But typically we give back all of those gains and go back to June/July prices, right? Right in here through this level. So knowing that, and then knowing a lot of the charts that we're looking at suggesting that the S&P could go lower, to me, this is a very good time to be patient and really, figure out the stocks that you want to be in. Okay. Don't rush into anything. Don't panic sell anything. But just, be patient over the coming months because a lot of things suggest that, closer towards the election, right over through here, you can see that we get typically a sharp pullback, right? Now, the pullback may be starting now, or, we may bounce a little bit. We may even make new all-time highs before we get that pullback, but there's a reason why the stock market drops ahead of the election. And the reason being for that is that the market does not like uncertainty. It has nothing to do with parties, whether it's a Democratic Party, Republican Party, okay? The data just shows you the proof. It doesn't matter what party wins. It's more so about the market doesn't like uncertainty. And then after the election's over, now the market has certainty. It has clarity. It knows who's president, what their policies are going to be, and then it moves forward. So I'll be looking for some buying opportunities over the next couple months, heading into October and getting closer to that election for a potential end of year rally. You see that right after the election, we typically have a very strong move to the upside. And there's good reason for that. The stock market generally rallies around holidays. We've got a lot of holidays jammed packed into those last couple months, and a lot of things like that. Okay, so we won't dive too much further into the SPY seasonality. Let's go ahead and move forward here. And so remember, we're expecting a little bit of a chop and potential drop due to seasonality. If we look at the VIX seasonality suggests that we should see an uptick, right? That volatility is going to continue rising, and look at where it peaks at right at the end of October, typically right around that election time, okay? So when you look at that, and if these things were to play out, it suggests that we're going to have some buy the dip opportunities later this year over the coming months. So, I just want to break that down for you guys. If you look at the VIX, right, we've got levels here, basically right around 15, okay? So when the VIX is above 15, that is typically when we're not in bullish territory for stocks. That's when you start to see some volatility enter the market, as we have seen. We got that 2% plus down day in a single day. If the VIX stays above 15, stays above 16, it's very likely that we're going to see and continue to see increased volatility in the market, which could cause, further pullbacks, right? But to really get a good edge in when volatility is about to start spiking, in my opinion, you really want to look at the VVIX, which is the volatility of the volatility index. This one moves faster, it moves quicker, and it moves ahead. So the VVIX will move up before the VIX moves up. That happens a lot of times. And so it'll give you a little bit of an edge, right? If you're monitoring the VVIX and you start noticing spikes in the VVIX, well, then you can look at the VIX and see, all right, well, is the VIX, maybe on a technical basis, is it forming any type of reversal candlesticks? Does it have any bullish patterns or formations, anything like that? And it'll kind of let you know when you really want to start paying attention to the VIX. Now, the dollar is also seasonally strong heading into mid-September. Why is that important? Well, because it's not a coincidence that the bear market bottomed when the dollar peaked, right? At the same exact times. The dollar is typically a headwind for the stock market, okay? And so if we see that the seasonality from now heading into mid-September for the dollar is strong, again, that's another thing via seasonality that suggests that, the next 2, 3 months could be choppy, could be a little messy for the S&P 500, but there could be some good buying opportunities there. Because if you notice, after that seasonally strong period, what do you see? You see the dollar roll back over again. Now, when we look at the dollar has essentially been in a giant range for really the past 2 years. Okay, let's just call it this giant range right here, really just moving sideways. Okay, now you can micro analyze it, zoom into smaller time frames. But overall, we had a very bullish trend, right? We had a pullback here, and now we've just chopped, 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 and we haven't made any major decisions. Now, if the dollar breaks out of this trend line here, most likely that's going to be very significant and a big headwind for the stock market and also for gold and precious metals. All right, gold and the dollar also have an inverse relationship. So you want to be watching gold, you want to be watching the stock market if the dollar breaks out. Now, one of the big signs to watch out for if we were to get a breakout, okay, is a breakout, retest, and push higher, or an oops, okay, a little bit of a false breakout, okay, a false breakout. Let's say we move up to here, right, and we get this move, and then we roll back over. That's going to be a classic look above and fail, a classic false breakout. And the important thing of why those are so important is because false moves lead to fast moves. So if we have a false breakout here and we fall back below this trend line, most likely it's going to lead to a significant move, to a fast move back to the downside, as that seasonality suggests that we could potentially do, right? We're going into the strong period. It would make sense if we break out, but we really want to see if we have a continued breakout or if it's a false breakout and we end up rolling over. Now, when you zoom into the dollar and you go to the daily time frame right now, the main things that I'm looking at is the MACD right here. The MACD is curling very hard, potentially on the crossover, and we've also got a bullish chart pattern known as a falling wedge. Okay, so we had support right here. All right, we've had this support level here for a while. It's basically 104. We dipped down below 104. What did I just tell you guys? False moves often lead to fast moves. And you see we had kind of a liquidity grab here, right? Where we broke down and then we immediately had a large green candle and we've traded higher ever since. If the dollar was to continue going higher off of this falling wedge breakout, it would make sense to me if we're to move back up towards the 106, maybe 106.5 levels. Now, the resistance level you want to pay attention to is going to be 104.78. Okay, 104.78 is going to be a key resistance level. If it gets back above there, the odds greatly increase that, again, we can come up to that 106.5, maybe even potentially 107.35. So those are the main things to watch on the dollar, in my opinion. And when we move into treasury yields, right? We had a topping pattern form over here. We gapped down below support and we continue to downtrend. Look at where we're at right now. Okay, some people might want to call this a sloppy head and shoulders, right? And some people might say that where this is a left shoulder, no, this is a head, and maybe this is a right shoulder over here. Okay, maybe that's the case, and we have a little bit of a neckline, and we could look for a move to the downside. Yeah, that's possible. But if we just keep things simple, right, this does look like a nice rounded top. Below 4.25, that's going to be the key level for me on the 10-year yield. Below 4.25, things are going to remain bullish for the TLT, for the bond market, okay? Now, if this starts to reclaim this, right, and we start to move back upwards, notice that we're in a downtrend currently. That could potentially signal a shift and we could break out of that trend. So you really want to pay attention to the treasury yields and let's just call it 4.25. Okay, that's the main level that we really want to stay below. Below there, we're going to be targeting basically 4%, right? 4.03. But now, let's get into TLT, okay? The main thing on this weekly time frame is going to be the anchored VWAPs, okay? So we anchored a VWAP here, all right, to the highs, all right? And then we anchored a VWAP here to the lows, right? So this was our most recent high, okay? The highest point that TLT rallied up to was almost 110, right around 109.68. Ever since then, it's been a lower high, lower high, lower high, lower high, lower high, right? Our lowest point over here, 82.42. If you anchor a VWAP to it, all right, to both of these moments, you see that price action is pinching in between these, right? Above your anchored VWAP. Remember what a VWAP is. It's the volume weighted average price, okay? Big institutions are on record saying they use these, right? Ken Griffin, CEO of Citadel, all right, basically the largest market maker, is on record saying that they buy at the anchored VWAPs, that they use the VWAP, right? And so above a VWAP, the bulls are in control, and below a VWAP, the bears are in control. And right now we're pinching in between these, right? Look at this nice bullish candlestick right here, this bullish hammer candlestick that closed right above our 92.83 Fibonacci level. That is a very good sign. And if TLT can finally break this downtrend that it's been stuck in, right? I thought we were going to break out, guys. I thought we were going to do it. We rejected it once again. If we can break out above that trend line and break out above this anchor VWAP, TLT is going to be heading up to 99.27. Okay, that's your next Fibonacci level. And once you get above a 61.8% retracement, the odds greatly increase of a 100% retracement that would take us back up towards 109.68. Okay, so that's what I'm looking at on a weekly time frame. And when you start digging into Elliott wave, all right, the market typically moves in 5-wave structures or 3-wave structures, right? And we got a very clear 1, 2, 3, 4, 5 down, okay, back into a prior demand zone for TLT, and we saw a bounce. And now, typically, after your 5-wave structure, you would look for a 3-wave structure. Now, this is just a rough estimate, okay? Taking us back up towards the 61.8% Fibonacci retracement. This is going to be a multi-year pattern, okay? This isn't going to happen overnight. I'm not telling you guys that TLT is going up to 137 by the end of the year, okay? So set your expectations correct. You know, we could do something like this, right? Where it rejects here, moves down, and only comes up to a 382 retracement right around 116. So this is just a rough guideline to give us a roadmap, okay? But we are going to be looking for a 3-wave bounce up to the upside. Now, we've also got this right here. Okay, again, so if we anchor our VWAP to the lows, right, and we throw on a 50 SMA, we see that we're trading above a rising 50-day moving average, and we're trading above that anchored VWAP from the lows, and we're just going to be looking to see if we can break out, okay, break out of this triangle pattern, which is, you know, the key level to watch for on the breakout is going to be 95.50. Above 95.50, we've got this gap up to fill at $97, and I think that that's a target area above 95. Now, you can also look at the RSI. We want to see if we can get a momentum breakout. We want to see if we can get a MACD crossover, a bullish crossover specifically here for these. Now, here's where we kind of dive deeper into the Elliott wave, okay? And we're looking at a larger cycle, wave 1, wave 2, wave 3, wave 4, wave 5. Okay, your wave 3 right here typically should be made of a 5-wave structure, right? And so that's our 1, 2, 3, right up here, 4, 5. That will take us anywhere from about 109 to about 111. Okay, so that's the larger cycle targets, you know, maybe for 2025. All right, and heading into 2025 and later in the year in 2025. Currently, right now, what we're going to be looking. All right, now again, this is a larger time frame, okay, that we're looking for some of these targets to hit. If we zoom in real quick, let's look at some of the things that could potentially invalidate this, right? That's what we want to pay attention to. That's what we want to see. Let me find that slide deck real quick. All right, here it is. So here's that larger wave 1, wave 2 pullback, right? And now we're looking for wave 3, which should consist of 5 waves. Okay, so we're going to be looking for 1, 2, 3, 4, 5, taking us up to, you know, basically right around $100. Okay, right around 100. The exact level here is 101.96. You know, as a technician, you draw these things with crayons. Okay, they're not specific pinpoint levels that you live or die by. But it's something to give you a roadmap, give you a guideline, right? Now, what could invalidate this? If we break the 618 Fibonacci of this 1 up and 2 down, right? Notice that that's exactly where we bounced at the 61.8% retracement, which is basically above 91.50. If TLT starts closing and rolls back over below 91.50, the odds are going to greatly increase that we come back down to at least around 89.82. Now, we do have a small gap down here to fill. Okay, will it completely invalidate if we come back down and fill this gap? It won't completely invalidate it, but again, the odds are starting to increase that we move back down towards 89. if we break below that 91.50 level, right? Now, we did a really good job of bouncing there, right? We gapped up after that, and we really gapped up 2 days in a row on TLT. So that was very nice to see. And we're going to be looking to see if we can break 94.40, head up towards 96.05, and then ultimately 98.88. That is going to be our wave 3 target of, the sub count of this wave 3 right here. And then we would look for a pullback and then one final leg up before, again, we end up seeing another pullback here, okay? So that's TLT. That's my opinions on it. That's my opinions on the market. We went through a lot of charts. Let's go over some data real quick. Now, if you take a look at the year-to-date change of 2023 versus 2024 so far, it's almost kind of scary how closely we're following. We peaked last summer and then we dropped all the way into late October, which a lot of the seasonality suggests that we're going to potentially do again. All right, we'll see if that happens, but you can see last year we had a strong rip to the upside after that, late October bottom. Now, this is just another seasonality chart here from Ian McMillan, talking about how we're going to start moving towards the open field, no incumbent's trajectory and away from the typical sitting president. The open field is this one right here, is this dotted line. So if you notice in the others, we end up, they all typically bottom here and make a type of bottom at the late October. But this one does not continue to make new highs, right? It peaks in the summer here and in the July, August, September time period. And then heading into the end of the year, we bottom in that late October, but we don't end up getting that full rally back to new highs as the other two suggest. So that is something to keep in mind, right? Even if we do bottom in October, it doesn't mean that we're going to make new all-time highs. Now, when you look at stocks and bonds, the S&P 500 index has actually been more positively correlated with bonds than it is with stocks in the S&P 500. What does that even mean? Well, that means that the stock market is typically moving in the direction of the bond market, right? Of something like TLT, for instance, rather than moving with the stocks inside of the actual S&P 500. Now, how's that even possible, right? You may be wondering. Well, we know that the Fed rate cuts are a very big topic, right? And basically the topic of the year. The gains in the S&P 500 are actually being driven by, basically the top 50 stocks, right? Whether you want to call it the Magnificent Seven, FANG stocks, or the top 10 stocks, it's basically the top 50 stocks are carrying all of the performance for the S&P 500. And so the other 450 or 490 stocks, they are not moving with the S&P 500. Right. That's all that this chart means, is that the stock market is actually following more closely to the bond market than it is the actual stocks inside of the S&P 500. And the reason being for that is because so much of the gains are due to those big, large, heavy mega cap tech stocks. Right. Now, it takes bulls to have a bull market, and we're extremely bullish. Okay. We're at a level that we haven't seen since 2017. And you notice that we saw a correction afterwards, right? We saw a correction after the last time that we were at these levels. Does it make sense if we were to see a correction, over the next 3 months, over the next 6 months? Yes, it does, right? But that doesn't necessarily mean that we're heading into a bear market or heading into a recession. Now, when you look at client flows driven by institutional clients and hedge funds, clients were largest net sellers of U.S. equities since 2015 across all segments. This is small cap, mid cap, large cap, with large cap outflows last week for the first time since May, right? So you can see here hedge funds and institutions, small cap, mid cap, large outflows out of all of these, right? And so does it make sense that we're seeing large outflows and a pullback in the market? I mean, you tell me, right? That's pretty common sense. All right. So don't have to dive into that too much, but we are seeing lots of outflows in a time where we're also seeing a pullback in the market. Now that wraps up today's video. Hopefully you guys enjoyed it. If you enjoy my analysis, you enjoy my charts, you're really going to love the Investment Intelligence private trading group. You can gain access to the Discord right now for just $1 for your first month using promo code SUMMER. Okay. And then after that, you can decide if you want to stay and pay the regular monthly fee, or if you guys want to, leave, then that's fine. That's why I'm giving you guys the trial basically for $1. Inside of there, you're going to get 20 plus swing trade ideas weekly, custom scripts and indicators that I use, exclusive intel, exclusive chart layouts, really amazing stuff. or you can just sign up for the newsletter, right? Don't forget, there's the website associated with it. You can go in there, you can read the articles, read some of the previous newsletters that have been sent out. Decide for yourself if it's something that you guys are interested in, you want sent directly to your email inbox. You can sign up for that using the link in the description below. And I also do lots of coaching sessions, right? If you guys ever want to do a one-on-one session, or a coaching session, right? Visit my Ko-Fi page. There's a link in the description for that. Click on the commissions tab, and in there you can book a 30-minute or a 1 hour session. I just did one here recently, a couple of weeks ago with one of the members, and just kind of telling them, hey, if you're having a bad year, try and just focus on the S&P 500 more, right? A lot of people want to be individual stock pickers. You can focus on the broader market, right? And try to follow some of the trends. I was kind of mentioning that, hey, we're going to start getting these corrections, and these are going to be potential buy the dip opportunities. Just go over a lot of different things, right? Whether it's day trading dynamics, whether it's swing trading strategies, whatever it is, we can go over it. A lot of people hit me up for options and different option strategies you can use, or how to hedge or leverage the shares that you own. You can book those directly through the Ko-Fi page, clicking on the commissions tab. And again, you can book a 30-minute or a 1 hour session. Really appreciate y'all watching the video. Don't forget to smash the like button, subscribe to the channel, and also share the videos, guys. Okay, I'm trying to put out really good content for you guys. Not just garbage BS. And a lot of times that stuff doesn't get the views or attention it should, versus someone who's just posting clickbait and just kind of talking out their neck. I rather try to back my stuff up with data, with charts, and give you guys some good stuff. So help me get to 10K subscribers. That's the next milestone for the channel, and I really appreciate that.